We're going to look at NZDCHF. Yataurwa na posting though.
Everyone is coming late, so I must call the shots.
Yeah, you must go and call everyone to come.
People are late. People will be busy somewhere else.
Yeah.
Oh, I'm sure he's very occupied nowadays.
You must be at work.
Yeah.
Okay, so let's.
And where's Mr. Wilson and who else?
Now there's only Taku here.
Taku, okay.
Yeah. So let's look at NZDCHF from a monthly view. Bostindo, what do you think?
Monthly view.
Yeah, what do you think is going to happen by looking at the monthly chart?
Monthly chart, I've been trying to check now. Yeah, I think it's almost the same scenario as the one for yesterday.
The card CHF, huh?
Yeah.
Yeah, almost the same setup is happening here. But there's one interesting setup now on NZDCHF. That close, the close of March.
The close of March.
Yeah.
Yeah.
It's quite interesting.
Okay.
Let me just check something quickly. It's almost the same setup. If you look at, it's exactly the same setup. If you go to card CHF, you see, it's the same setup. But now, if you look at NZDCHF, yeah, people can benefit from long trades. There is a better opportunity to take up long trades all the way to last week's high. If we go on
Go back to
now, I'm gonna go on a weekly chart. Oh, sorry, this is card. Now, let me go on a weekly chart on NZT. You see last week's high.
Yeah.
There is an opportunity there for market to trade to the upside because you can clearly see the major moves are happening going to the upside. You see?
Yeah.
So for us to only consider shorts is when market trades up to 5993 or when market comes back to this range here. This is my down candle which was broken. That's 61977. Let me just verify that with a monthly chart. Right. Monthly chart, this is the level that was broken. Our last down candle which was broken by the February close. Right, let me just highlight that. So this area, this candle engulfed this demand zone. You see, so when market, there is an opportunity that market can retrace back to 61243. But now these are the type of trades that you have to take with the low risk, because at any given time this market can crash to the downside. So you need to take low risks trades when you're going to the upside, but only when market gets to 59930 or 61243, you're definitely gonna get opportunities to short the market to the downside for close to 30, 40, 50 pips. Because right now, if you look at the current week or current weekly chart, current weekly chart is like, let's see, where are we? is like 78 pips away from last week's high, of which you would expect to have liquidity above the stops. You see, there's stops. Yeah, there's stops above last week's high. So market can look to rally and clear up those stops. Then it gives you a chance to short. You see, that would be a definite trade. You definitely get quite a few good pips from 59930. You see, remember 59930. That's our last week's high, which also is so this is May, April, March. Last week's high traded all the way back to close to February low. I think it is February low. Let's see. Let me zoom in nicely. See, if you read the price action properly. Okay, this is our February candle, right? Let me highlight it. This is our February candle, right?
Yeah.
And this is our April candle. Now, if you look at April's high is coming in at 59927. 59927. Then look at February low is coming in at 59913. You see?
Yeah.
Market dipped into the low of February, but didn't hold that price range, and then it dropped. You see?
Yeah.
Now, if you look at last week's candle, that's the one that reached all the way to 59927. Then, if you look at February low, it's coming in at 59913. They just dipped in. Probably there was a gap somewhere. If you go to lower time frame, you're gonna see there's a liquidity gap. You see, this candle. Let me show you the gap that I'm talking about. You see this candle?
Yes.
In the low of February, there's a gap there. You see, there's a gap between this low and this high. There's a fair value gap there, which was closed eventually here, and price didn't stay above. It rejected higher prices, then it dropped to the downside. You see? So trading from an institutional point of view, you'd have already took note of that. Anyway, let's do it quickly. Let me mark out. This high. Right, we've got this high here. I don't know what week is that, so I'm just gonna say. So this is 752. So we've got the high that's coming in at 752, and then we've got the low of February. Okay, let me get rid of 5937 for now. Can you see the gap that I was talking about?
Yeah.
This gap, which was eventually closed here. Now, if we go to a lower time frame, this is on a weekly chart. Let's go to a lower time frame. Say we jump down to a daily time frame. Now, can you see the price action that's happening on a daily time frame? That was a clear stop hunt. You see, our last up candle, the following candle, close above, triggered the stops and close below. This would have been your entry to the downside. This candle here, this one, that offered close to 100 pips. You see, because you'd have definitely noted that price has to rally to that fair value gap to close it, because there'll be liquidity there. Once it breaks
those candles, they are too clean, no wicks.
Once it breaks above and close below, that's your trigger. And for short trades, obviously, from a daily point of view, this trade is for someone who's trading from a daily point of view. If you want to be precise with price, you go onto a H4 time frame. Now look at H4 time frame. What do we have at the same area? What price action do we have? We've got a bearish engulfing pattern.
Yeah.
The same area. Okay, let me go back to a daily. You see this price action here. The last up candle, which is our bearish order block. Then we've got the bearish candle, right? If we go to a H4 time frame, right? Let me just zoom out a bit. You can clearly see we've got a bearish engulfing pattern. This is our bearish engulfing pattern. This candle here, it engulfed 1, 2, 3 candles and close to 75% of this up move.
Yeah.
You have seen that, eh? So now what you have to do now, this would have been your confirmation, right? This would have been your confirmation. Obviously, you can take a short once that candle closed. Can you see it closed without any wick? There was no wick at all on the bearish engulf. So you could have taken a short exactly when it closes. You see, you could have taken a short position all the way down to this bearish order block. That would have been your target, right? Which is like 150 pips. Now this is from an H4 entry point of view. You see, meaning a daily time frame, yes, it's going to give you a definite trade, but you're going to leave some pips on the table. So now if you go to an H4 time frame, you are increasing your number of you're increasing your reward ratio. Now once you have seen a bearish engulf, the other way that you can take an entry, right? Because market has dropped down massively, impulsive move to the downside, that's a supply zone. The moment you see a retracement, you see we've got a green candle here. You see?
Yes. Yes.
We've got a green candle which showed us a retracement into the supply zone. That was almost 50%. Okay, let me grab my fibs. Let me measure from this high to this low. Right. The high to the low. Let me zoom in. You can see market dropped, creating our supply zone. Then you see this retracement. The next H4 candle retraced to 50%. You see, equilibrium, 50% of the supply zone. The second candle, that would have been another second entry because you are expecting the sellers that pushed the market down here to hold their ground. And remember, you're on a fair value gap which has already been closed. So it means you're already anticipating what? Short trades. Now, the third candle also retraced 62% into our premium range. You see?
Yeah.
So your second entries or the second positions that you would have added, you see, to the trade, they would have given you an extra 26 pips. You see, that's on top of the 100 and something. So in total, this trade would have yielded close to 180 pips. So now when we look at current price action, we need to anticipate market to at least trade back. You see that bearish engulfing candle, that's our supply level where we should be hunting for short trades. So that's coming in at like 5975, between 5975 and 59919. This is an area where you have to be hunting for short trades. You see, that's the first area you have to hunt for short trades. The second area is going to be 61243. That's the second area to look for short trades, because now we are expecting the sellers from a monthly point of view. You see, those sellers from February and March, we expect them to come back into the market around that price zone. You see?
Okay. Yeah.
It becomes very easy to know. The moment you really look at price action, these things become so easy. You see, it's unfortunate that obvious we don't have enough time to be looking at all the pairs. That's impossible. We can't look at all the pairs. But for study purposes, we can look at the pairs, dissect it, and discuss what happened in hindsight. You see, so that in the future, when we see those setups forming on current price action, then we have to take the positions with clear mind that no, we are 90, we'll be 90% probably correct. You see, like that fair value gap which was closed. If market does retrace up there, you see, that's a very good area where you're gonna take short trades with minimum fast to say, no, I might lose. The moment it breaks above that gap, then you definitely know you are wrong, because market will be going all the way to 61243.
Yeah.
Market will be going all the way back up. So for now, I think NZDCHF low risk trades to the upside with a target of where are we on this line here? Low risk with a target of 5970. You see, low risk trades. That means small lot size. You don't go crash bang. You see, low risk trades to targeting 59970. But once it gets to that area there, then look at price action from a lower time frame. That's when you have to go to an H4 or H1 time frame. You see, now if we go to an H1 time frame, remember that bearish engulf. Can you see what happened? It created a swing high here, and then there was a swing low. This spike here, this big candle with a wick, this one here, this would have been your good entry.
OTE.
Yeah, to the downside. Let me put the fibs quickly, then we can see. So this
expansion.
This is our low. You see, it retraced all the way back into the 62% range. This would have been a very good area to enter the market to the downside. So the moment you highlight a zone on a higher time frame, that's a very big drop, and market never looked back. It's only like 1, 2, 3 green candles before this range here. So the moment you highlight a zone from a higher time frame, go down to a lower time frame, at least to an hourly chart for entries, you see, because it's gonna increase your reward ratio, you see. Because like now,
and reduce your stop loss.
Yeah, reduce your risk, you see. Because if you enter on a daily time frame, like for instance on NZDCHF, this pair that we are looking at, for someone who entered on a daily time frame, that means he entered his trade here, right? Or a return of say 90 pips, but his stop loss would have probably been above the high of that last down candle, you see, up here. That means his reward is less than 1:2, you see. His reward, it's less than 1:2. So there's no need to be risking 80 pips and get 90 pips. That's just a risk which is not. Yes, the trade did pan out, but you'd have risked a lot to get almost the same return, which is not quite ideal. Because if you break down now this daily candle, because once you see this up candle testing the gap, the fair value gap, then during the next day, you'd have already anticipated the fair value gap to be closed. The moment it closes, then you are jumping down to lower time frame. Lower time frame, you see H4 closing it as a bearish engulf. You go to a hourly chart. When you go to an hourly chart, already you're gonna see this type of retracement. That will be your entry to the downside.
Okay. Yeah, I get it.
You get it, huh?
Yeah.
So NZDCHF, I think for now, low risk trades to the upside targeting 5970, but once it gets up there to 5970 or 59930, yeah, then we have to look for short trades. Short trades will be ideal from that price zone, because right now market is in a small uptrend. Market is trying to push to the upside.
Check out, can you also check this one, EU NZD?
EU NZD.
I think the same setup with different rate. The other one is free.
EU NZD. Let's see, where is EU NZD? Do I even have EU NZD? Pam 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 pam. EU NZD.
There it is.
Ah, I got it. It's on the minus section.
Minus, yeah.
EU.
There.
You see now, me, the thing is, I never open these charts now. So it has to load first. It is. Eddie, your network is not really good today. I don't know what's happening with you. Maybe they've hacked your network again.
Yeah, my name
Everything is egged.
Let's see. It's loading, and then we can see what we are talking about. So, what do you think is happening, Boss Eddie, on Euro NZD?
I think we have to look for longs in this area with the gap. You see that area with the gap? Yeah. These lows here. The last downturn we have to look for buying.
Yeah.
Because I think it's the same as the ones which you are explaining now, but the difference is only that this one is on the upside.
So we'll be hunting for long trades. Let me just let it just load a bit, because it's still loading. It's still loading. Yeah, but already from looking at it from a daily time view, you can see this last down candle here is gonna offer chances to take the market to the upside. There's gonna be chances for market to push to the upside. So that's I think we're looking at 176.89. If I'm not mistaken. What is this? So it's coming in at 177.13. Okay, let me get the exact price point. 177.151. Let's highlight that. 177.
151.
Oh, 151.
No. Yeah.
151.
77151.
715.
No, you put this 77151.
151. So that was the close of our last down candle, probably like 2 weeks ago, if I'm not mistaken. Yeah, so that area, the 77151 area, is going to offer chance to take the market to the upside. And if you look at it from supply and demand zone, it's a new demand zone which has been created from an old supply zone. You can see these highs here. Let me go to a look at that. It is an old supply zone, which is now a
supply tend to do demand.
Yeah. So definitely long positions will be ideal from this price area here. You see now, the more you go to a lower time frame, you can clearly see this H4 candle here, this last down H4
20.
You don't see that on a daily chart, you see.
Yeah.
You don't see that on a daily chart, but the moment you get more precise with your price action, then you're gonna see, okay, no, this is my last down candle, so I have to expect market to at least reach for 766. Okay, no, this is not. Let me just get the clear low of that candle, 76616. So it's coming in at 766
16.
one what
16.
16 76616. All right, you see 76616. That's the best area for you to hunt for long position, but it can even be in between. Now you see the range that we highlighted from a daily time frame. So in this
Yeah.
gray shaded area, that's your hunting ground for long positions. Long positions with your stop loss 15 to 20 pips below 76616. You see, so that the moment you see your stop loss getting triggered, probably market is now going all the way down to this. Then you definitely know that you were what? You were wrong. You have to accept that. You see? You have to accept that you were wrong. You see? So this area is gonna offer better chance to go to the upside. And when you take a long positions now, your target should be above here. Your first target should be here. You see this range here. This is your first target. Let me just put a line here. So 79482 will be your first target for a long position that you'd have taken in this range here. Let's say you take it at 50% retracement of that bullish order block. Yo, that's a lot of pips. That's like 260 something pips. You see, that will be your first target. So now you can refine that by going onto a 1 hour chart. You can refine it further by dropping down into a hourly chart. You see, so the gray shaded area, you see, the gray shaded area of which right now you can already see that market is going down there. You see, it's really gonna attack 77151. 77151 will be under attack very soon. Market is gonna reach for that level before we start seeing some retracements to the upside. So your first target will be this range here.
Yeah.
This will be your first target. But the moment you see price, say you have entered a long positions in between that shaded gray area, let's say the equilibrium of that range, right? The moment you see market coming up to this big candle which moved to the downside, obviously you have to scale your profits. You see, either trail your stop loss or take some off. You see, you take some profits off from your position. You see, the way you take off profits. Yes, trailing stop, you're gonna make sure that you get something from the trade. But let's say you enter a position with 0.1 lot size, right? You enter a position with a 0.1 lot size. Then you see that, okay, this position is now like 50, 60 pips plus in my direction. From that 0.1 lot size, you can sell. If it's a buy position, you can sell half of the position to say 0.5, meaning you have banked 0.5. Now the remaining position, it will remain there with a 0.5 lot size. Then that's the one you leave to run until, I don't know, you see, until wherever the target is. That's the one you're gonna trail stop. You see? Say you open a, okay, let me see if I can explain that to you. Say you open a position with this is what NZ Euro NZ. I'm on the wrong pair, right? I'm on Euro NZ. Oh no, that's the correct one. Say you open a position here, say a buy position, right? You've got 0.1 lot size. You see, this position is 0.1 lot size. But now it's not in profit. You see? It's not in profit, so there's nothing to modify. But let's say it would have gone in my direction with like 20 pips, then I can be able to close, say, 10 pips with a 0.5 lot size. You see, 0.05.
Yeah.
If it's 0.05. So half the position I would have taken off the table, and then I'll leave the other half of the position to run, and that's the one I'm gonna trail stop. You see, meaning you're gonna get more. You're gonna get more from just rather than just trailing stop the whole position. You see?
Okay.
Yeah. I hope you understand that part.
I think I need to. I think I need more explanations on that. Okay, let's say you buy. I mean, this is a
Yeah.
buy,
Uh-huh.
and you need to get to somewhere close to this red line. Yeah, that means then that's when you stop. Right, you put short. Is
Okay.
it correct?
Let me
That
explain it
short will be
quickly.
0.5.
Let me explain it
These
quickly
lines.
because time is almost up. Let me explain it again quickly. Let's say you enter a position, Eddie, with
Yeah.
one lot size. Let's use whole numbers so that you can understand perfectly. Let's say you enter a position with one lot size, right? Your stop loss is 10 pips, your take profit is 50 pips, right? Now, you'd have bought, and then you'd have seen that, no, I've got 30 pips profit on that one lot size position. That means you've got $30 profit, right? Now, instead of trailing stop the one lot size position, you take off, you see, you take off half of the position, half of one, that means 0.5. You see, you are banking 0.5. You're guaranteeing yourself that 0.5 is now in my equity, it's now in my account. Then the remaining position will be 0.5. That means if you are in a buy position, you are going to sell half of that position so that you get the profit in your equity. Then you leave the other 0.5 running, right? Remember, your stop loss is still on 10 pips, but that other half position that you have left running, the one with the stop loss of 10 pips, that's the one you're gonna trail stop. Why you have already banked half the position into equity, is it? Not to trail stop, not to trail stop the one lot size. Yes, you can trail stop it, but now it means you're guaranteeing yourself, say you have trailed stop up to like $20. You're only guaranteeing yourself $20. But if you trail stop a position that you have taken some off the market, half of the position you've taken it off, it's now in your equity, which is $15. Then you trail stop the remaining $15, you trail stop it to $10. Then you let it run. That means you have banked $25.
Okay. I understand it.
You understand that?
I understand.
Yeah, I'm gonna try to do a video illustration.
Of that one.
Yeah, with a position that is in profit. You see, see, did my oil close?
Okay.
Let me see if the oil is closed. Right. You see, I've got an oil position here, but it's 0.1 now. You see, so I can't really trail anything. Let's go to euro. Right. You see this euro position. There's 1 minute left. Let me do this quickly. You see, I've got a euro position with 0.1. That's a 0.1 lot size, and it's already up by 35 pips. Now, I can sell half this position. I'm going to double click. Why isn't it allowing me here? Stop loss, stop profit. Market execution. This is a buy position. Can you see? This is a buy position.
Yeah.
So now let me go here to 0. 1, then I'm gonna go 0.5. 0.05. So it's a buy position, right? You see here, down here, it's saying close buy 0.05 at blah 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 market. You see here.
Yeah.
So I'm gonna close that one. Now, can you see the remaining position has got 0.5?
5.
Meaning I've already banked what? Half of my position. Now my stop loss now. You see my stop loss. Then I'm gonna move my stop loss up there.
Yeah.
That means I've already guaranteed myself more than just trailing stop a one position.
I didn't know about this.
Time is gonna cut anytime now, guys. So there's 1 minute left.
But this is nice.
Huh?
This is nice.
You
Yeah.
see?
It's possible, but I didn't know how.
Yeah, that's how it's done. Bit by bit.
Now I understand. So it only you can put, let's say if you have a 0.1, can you only put half, or you can choose any 0.2 or anything?
No, you see now, right now there's I've left 0.5 on the table, right?
No.
You see, I've left a position with 0.5 lot size, but already I've trailed the stop. When I did that process, like, okay, let me go to this position here. Right. You see here, then I go to market execution. I've got a 0.05 position that is still remaining. Of that 0.05, I can still take off 0.02. Then I will remain with a 0.3 position.
Mm-hmm. Okay.
You get it? So it basically means that instead of trailing a stop on your position, right? Say you've got a 0.8 position open, right? And then you have seen that, no, this trade is now 40 pips in your direction, whether it's a sell or it's a buy. A 0.8 lot size with, let's say 100 pips, right? 0.8 with 100 pips, that's 8 times 100, that's $800. Then guarantee yourself banking $400 by taking off half of that position, which is 0.4. So when you modify the position, you're taking off 0.4. If it's a buy position, it means you're closing a 0.4 lot size position from the whole 0.8 position. That means you're taking off 50 pips and putting them in your equity. Now, the remaining half, which is 0.4, then you move your stop loss. You trail stop that position. You see? You trail stop that position. So it's like you are taking chunks of the profit as the market goes in your direction. You see? Say you're swinging. As the market moves in your direction, that means you're guaranteeing yourself at least a certain growth in your equity, rather than holding a position to a point whereby it can retrace back to your entry. Then there's nothing. You see, you've gained nothing.
You know, there are those entries which you see, like, I don't think the market is gonna come back here again. That's way that we do that stuff.
That doesn't happen in trading. There's no way you can guarantee yourself that this market is not gonna come back.
Like those levels
Huh?
in December, the levels of US dollar in December, did we get there? We never tested those lows again.
No, never.
USD.
No.
I don't think we're gonna go back there anyway. We're gonna go somewhere close, but we're not gonna go down on December levels on US dollar.
No, those levels, the only way we go back there, it's probably a market recovery. It means market is now in recovery mode. But it's gonna take a while, you see. It's gonna take a while. So yeah, that's what I wanted to show you guys on how you can take off some profits off your position which is in profit, rather than just leaving the position running or trailing stop the whole position. You need to make sure you guarantee yourself, let's say, half of the position or even 75% of the position that you are holding in profit, right? You take off and make sure it's in your equity. You close that half of the position. Then the remaining position, you trail stop it. That's the one you're going to leave and let go. You see?
Yeah, that's true. That's true.
That's how it's done. So you just go to your position, right? Let's see, where's that fiber?
Double click.
Where's that fiber? You just double click the position, right? When you double click the position, you see, then you go to market execution, you see? Then you specify. Right now it's 0.05. So let me take off another 2, right? Another 2 mini lots, micro lots, I mean. Let me take off 2 micro lots, right? So I'm going to say close, you see? So remember that position was 0.1, right? It was a 0.1 position. But right now, I'm just holding 0.03. That means I've taken off 70% of the profits into my equity, right? And then I've just left the 0.3, of which that 0.3, I've already trail stopped it. You see? Meaning, even if the market does come down, right? I've guaranteed myself more than 70% return on that position.
Okay.
Yeah. Anyway, guys, I don't know who's on
Thank you very much.
It's not Naomi.
I wish Moja was seeing this.
Huh?
I wish Moja was here seeing this.
He's gonna see it on the recording. And the moment
I think that
the moment he sees,
think
he's
that
gonna say, "Our profit, you need to really explain nicely again." Because I'm telling you guys, the moment you master this, then you, because most of the trades that we take, most of them, they always end up in profit, but we sometimes get overconfident, then the position is
Out sometimes.
you see?
That's true.
Yeah, we get too overconfident that the position is still gonna keep going in our direction. But now that's the market doesn't work like that. Make sure you guarantee yourself some gains. Then whatever happens later can happen later. You see? But after you have guaranteed yourself some gains. So yeah, I think that's pretty much it about for today. And then let me just record this session and then I'm gonna upload it for the other guys.
Okay, thanks.
Yeah. All right, boss.
Okay, thanks.
We link up.
Yeah. Tomorrow I think I'm gonna pass through there.
No worries. I'll be there.
Okay.
All right, sharp guys.
Thanks.
About